And we're back. This is episode 78 of the weekly LongVol videocast and article of the week for the week ending July 24, 2025. My name is Dan Bustamante, the founder of the LongVol Report, also the CIO of the investment management firm Bustamante Capital Management. This week's title is Nobody Cares About Macro. I am going to tell you how I really feel in this week's show, and we're really going to focus on a few things and talk about the report that we publish each and every Sunday. Before we get into it, so family first updates. For those of you guys that sent messages in regards to my father's health, positive updates this week. He had surgery on Tuesday. It wasn't an invasive surgery. They were worried that when they were taking out this tumor that they'd have to get more invasive. It would have been a 2-month recovery time. The robotic surgery work technology is fascinating, and he'll be out in 5 days. So I've been stuck here all summer in Phoenix. I live here half of the year for those of you guys that are new here, and half of the year out in Puerto Rico, about 45 minutes outside of San Juan. So the positive is for me, I can get out of the heat because it's been 100, 110 here, and positive for my dad, obviously. His health is improving, and we're looking for, hopefully, no problems going forward because it's been a rough summer health-wise. But again, I appreciate the messages. Everything's good. I'll be able to get back to Puerto Rico hopefully in 2 weeks and get back to regularly scheduled life there, which I definitely miss because, like I said, it's just been super hot here in Phoenix, and I miss the time zone as well. Okay, those are the life updates this week. In this week's video cast, we're going to do it a little bit differently. What I want to do this week is I want to focus on the LongVol Report. For those of you guys that are new here, we publish this report each and every week. The entire premise of that report is idea flow. It's not about macro. It's not about calling S&P 500 tops. It's not just about value investing. It's not just about technicals. The entire premise is generating idea flow. Idea flow matters to me. For those of you guys that are new here, I've been in this business for 2 decades. I've done this literally 24/7, 365, pretty much my entire adult life. And I do it today as I manage money for clients as well. Without idea flow, I'm dead in the water. I'm not somebody that goes out and subscribes to newsletters. I'm not somebody that looks at macro reports. I'm not somebody that sits here and watches CNBC looking for the next idea. I like to make the joke. I'll make it on here on the videocast this week. We do all of our own stunts in-house. What I mean by that is we generate our own idea flow. And what I want to do on the show this week is I want to walk through 3 specific ideas from the report this week. I want to walk through Etsy, OKLO, and HIMS. And what I want to do is I want to explain to you guys how to use this report a little bit more in depth. And these 3 ideas are 3 entirely different ideas. Etsy is kind of a fundamental revenue reacceleration play. OKLO is kind of a speculation, momentum trade. HIMS is kind of all-time high breakouts / technical trade. There's 3 distinct characteristics in these ideas, and I want to show you how it goes from the idea phase to the actual execution phase this week on this show. So that's what we're going to talk about. For those of you guys that are here, make sure to subscribe. You can listen to this podcast on Spotify, Amazon, Alexa. Just ask for the LongVol podcast. Obviously, if you're watching on YouTube as well, you can watch it there, and also follow on Twitter. Okay, that's what we're going to get into this week on this show. Let's kick it off and start like we always do with a recap this week and talk about the report, which was titled Nobody Cares About Macro. So before we get into kind of what we wrote here this week in the article of the week, I want to talk about why we titled this week's report Nobody Cares About Macro. And to give you some context to this, like I said, I've been in this business for 2 decades, and I do this full time. It's what we do. We have to look at companies going through, especially now, their earnings reports, listening to calls, et cetera, just to generate idea flow. And the reason I titled this week Nobody Cares About Macro is really for 2 reasons. Number one, last week when I was in New York, I was spending, I think, 3 nights at a steakhouse. By the way, if you're ever out in Long Island, it's called Rothman Steakhouse. Go there. It's incredible. I eat at Steak 44 in Phoenix. I think it's Steak 48 in Dallas now, one in Charlotte as well. But the original Steak 44, I think it's the best steak I've had in my life. I've been to Peter Luger's, all of them. But this place was pretty great out on Long Island. And I spent a few days there eating dinner after the markets and playing golf. And I was talking to 2 gentlemen in particular. One owned a Dunkin' Donuts, not one, multiple Dunkin' Donuts franchises in Long Island. The other was a dentist. And as we start to talk about, our lives, business, et cetera, families, they never really got to the question and asked me about interest rates and the economy at large, whether we were going into recession, et cetera. And I was thinking about this, and I always expect that question because when you talk to people that don't do this full time, they don't necessarily ask you certain questions. They're not asking you saying, hey, look, what do you think about GXO Logistics, doing roll-ups or acquisitions? What do you think about, technical breakout trade? They're asking surface level questions. And what I found in my career is most of the time, people that armchair invest or don't do this full time don't necessarily ask the right questions. And I said it this week in the report. I wrote to you guys and I said, in the first opening lines, I wouldn't expect anything less. Just like if I were to ask the dentist about his practice, I wouldn't ask the right questions either. And I've had this experience pretty much my entire career. And one of the things that I thought about is people always focus on the wrong questions. And this is why I titled this show this week, Nobody Cares About Macro. Let me be clear before I get into this. I'm not taking a shot at the macro crowd. I have a lot of, issues with certain styles of investing, et cetera, et cetera. What I'm taking a shot at is it doesn't generate idea flow. In my career, the folks who usually talk about it are more concerned with sounding right than they do actually make money from it. And if I'm being blunt, most of them never actually do make money from it. That just gets them on CNBC, 200,000 Twitter followers, and for some, it allows them to sell the alleged smart money, $20,000 a month subscriptions. What matters to me is idea flow and revenue, aka P&L. That is, if you're here to actually make money doing this, and we are, because again, without generating P&L, we're not able to make money in our fund. I'm obviously not able to make money as well. Now, this is important for me. I don't deviate from the process of generating idea flows. I especially don't deviate from it in how we run portfolios in the fund. This is one of the reasons why I avoid reading news articles, subscribe to newsletters, or worrying about the macro takes. It's not part of my process for generating idea flow. I even told this to an investor last week. We had our quarterly call. I was going over his portfolio with him. We were talking about ideas and the plan for Q3, et cetera, et cetera. And he asked me about NVIDIA again. He asked me about my thoughts on this and where I thought it was going. The answer is this. I don't have any thoughts on it. I stayed in my lane. I do what I do, and we stick to a process. There's a movie that I can relate this to give you guys some context to it for those of you that are movie buffs. I'm a big fan of Top Gun. I watched it when I was younger. I think the first one was better than the second one, but that's just my opinion. When Maverick was out with Top Gun, he was flying this kind of mission out there. And one of the scenes, you can watch it there. I've clipped it for you guys. He's out there trying to be a hotshot. He ends up leaving his wingman. His wingman gets shot. Not actually, but he lost, so to speak. They were going back to the showers. His instructor comes in here and he goes, look, you know what? You're a great pilot. Some of the best flying I've ever seen, but you didn't stick to your wingman. Okay. And this is an important part. The way I can relate this to investing is this. We call it sticking to your process. Most investors don't have a process. When you do this 24/7, 365, you have to get to a process. Whether that's value investing, buying net nets, whether it's technical breakout trading, whether it's scalping the markets, you have to have a process. So what we're going to do this week in the video cast is I'm going to walk you guys through these 3 ideas that actually trigger it. So how do we go from the idea generation process to actually triggering into a position? And I want to talk about them with you step by step in the next part of the video. So the first one was OKLO. Obviously, you guys saw this week, the stock was up pretty big. In fact, I'm going to pull up a chart on this. We'll kind of go through it and talk about this, okay? Most folks, again, when you look at this particular name, they shun it. They're not super fans of it. And again, rightfully so. They're pre-revenue, whatever you want to call it. Cash flow is obviously, it's just horrible. We'll get there in a second. But there's one thing you can't deny. The stock's obviously moving, and it's not just moving in 5% clips. This thing literally up this week. This is 1, 2, 3. In a matter of 3 trading days this week, this thing is up 31%. Okay. Even more on the options. I've been making a lot of money trading this particular name the past, not 2 weeks, really the past 2 or 3 months. This idea is momentum driven. It has nothing to do with the financials or fundamentals whatsoever. If you go and look at the financials on this, there's nothing here that I would call an investment. Now, obviously, some people might take that approach. In our investment firm, we run portfolios. You'll never catch me investing hundreds of thousands, millions of dollars in a portfolio position like this. However, we will trade this stuff, and we're not above it. The second idea was Etsy. Etsy was another position this week. Again, it's debatable what you want to call this particular position. I think it's a revenue improvement / kind of event-driven situation because you've got such a large buyback on the stock. The stock is a $1 billion buyback. They just announced an additional 175 million, I believe it was, a few weeks ago, and that's caught my attention as well. This company, again, not that I'm a fan of it, I don't use it, but that doesn't make a difference to me. When we're looking at idea flow, I'm not necessarily looking to buy companies I love and want to own forever. I'm looking to generate P&L. At the end of the day, I think people, especially armchair investors, get lost in the idea of what you're here to do. You are here to make money. You're not here to buy things just so you can be right or to sound smart. In our business, in the money management business, on the hedge fund side, if we don't generate returns, we don't make money. So at a very, very core kind of belief of what we do, it is the idea generation process. The other position was HIMS. I talked about this week on the blog for those of you that have access to it. In fact, I'm going to pull it up here and you guys can go through it. Was another position on HIMS. And you can read through all of this. I'm not going to go through all of it and give you guys some insight, but I'll read some of what I said here on the blog this week. I go, if you're reading this and expecting me to give you a fundamental valuation on HIMS or explain some in-depth analysis, that you can click away. I don't care about the valuation or the company at all. I'm trading as a trading sardine. However, I've been doing that on this stock since less than $6 a share. For those of you that subscribe to the report, you remember I talked about this 2 years ago. Yes, I could have bought it. I just could have held it. But again, it's not what we do. When I look at a company like HIMS, we're going to pull up a few things here. I'm not against any of this. When you look at this particular name, you've got a lot of positives. You've got free cash flow accelerating. You've got cash and short-term investments accelerating. Profit margins are flat, expected. Assets are increasing. Revenues are increasing. There's a lot of positive signs in this company here. But you go back 2 years ago, I'm not somebody that can say, hey, look, I'm looking at a business and try to make the guess of where this thing is going to be. I can look at a company like VF Corporation or GXO, for example, or Boeing, and kind of have a more clear picture of what that company is going to do. And that's typically how we'll invest and put positions in the portfolio. So when I looked at HIMS, even at pre-$6, I'd rather trade this position. That's exactly what we've done. I talked about it with you guys in the blog this week on, I believe it was Wednesday. And more so, I talked about it with you guys on why we like this position. Okay. Not every investment out there has to be some fundamental story. Now, of course, there needs to be some catalysts. Okay. We're going to get to that here in about 10 minutes on the video cast this week. You need to understand a catalyst. What is driving the price action? Well, obviously, HIMS is pretty sentiment driven. A lot of retail investors are in it. I just went through the balance sheet with you guys. You already have a lot of catalysts there. So every chance that we get a pullback on this name, I'm looking to see if it gets to key levels to put a position on. And I walked through the position this week with you guys in this post, went through it. This is actually from the blog, by the way. I'm sorry, this is not from the blog. This is from the PDF. I'm going to go through it with you guys quickly and show you guys a few things, and we'll go through the other ones as well. And you already had the catalyst and more. Okay, now obviously we're not going to get every catalyst here, and I'll tell you guys some stories here as we go through the video cast this week. These are the catalysts that matter to us. Okay, so again, do we need everything to work for us? No, I just need to understand a basic story. And one of the things we talked about this week was, the price action of the commentary. It's consolidating well. So 51 clears. We have soft targets at 57 and potentially $60 a share. Given the nature of this stock and the daily chart, it might move quick, so extra attention is warranted. 40 remains hard support. And this is how we operate. When we go into the market each week, I'm not looking for texts from friends saying, hey, look at this headline and look at this headline. We come into the market every week looking for ideas ahead of time because we put a plan together. And this week I talked about the position I took on the trade. They were August 52 calls that expire next week at 176. I think I sold them for 520 to 580 a contract. Obviously, if you guys saw them move on Thursday, after this thing came out, we're going to pull up a chart here on this. So this is the move Thursday. Soft targets, as we talked about, were 57, which again, we kind of got there, 53s, 57s, and then 60. So we traded 59 60s, and that's important in the process. So before any idea actually happens and goes into play, before we put on risk, you have soft targets or targets in general. It's the same thing when we look at long-term investments, VF Corporation, GXO Logistics. The difference is on fundamentally driven investment ideas, we're not necessarily looking at technical price targets. We're looking at valuation targets. And so I went into some detail on this, and I talked about, again, executing on this position and what you're looking for. And for those of you that subscribe to the report, I can't stress this enough to you guys. The whole idea of the report is literally idea flow. It's so that you guys don't have to sit there and turn on CNBC. It's so that you don't have to sit there and scroll Twitter. It's so you don't have to sit there in 15 different chat rooms and figure out, what do I want to trade today? The idea flow and the idea generation process is already there. And again, I've had to take this approach in my career because I've been where a lot of new investors are, trying to find ideas. If you're going to do this for a long period of time, or if you're going to do this even on the side, you need to have idea flow, and this is a good process or a good picture of it. Okay, so that's that there on HIMS. I'm going to go through the next idea this week and talk about that. The next one we're going to go through is Etsy. Okay, so this is from the report this week. I posted this on Twitter. I said, these guys write papers and posts about macro all day, every day on X and don't even make any money from actually trading it. Look, I've been in this business for a long time, like I've said. The amount of posts I see that are pointless about recession, SOM indicators, US dollar, doom and gloom, it's absolutely a waste of time. And most people, like I said, in my experience of doing this, are not actually interested in making money. They're more interested about talking about this stuff and LARPing as investors than they actually are generating P&L. Okay, so the next idea is this. I want to go through Etsy with you guys, give you guys some insights. Again, this is not investment advice. The terms and disclaimer are on the website. This is a position I've owned for quite a while. When I say a while, probably about a month. But I posted this on Twitter. I said I added more Etsy today as we get into earnings. You get re-accelerating growth here with this name, with their gift mode program that's already working. Again, I'm not saying anything that's new. You could go to the last earnings report, pull up the PDF, and it literally tells you why the stock has been down. Okay. Number two, you get active share buyback here. They already had $1 billion going on this. You also had an additional $170 million when they did the $600 million convertible note. You also get an asset light business here. You get a free cash flow machine. We're going to get to that in a second. And technically, you have a catalyst as well. As we got over certain levels, we thought this was going to continue to rise, which it did this week. So in the idea flow process, you have a catalyst, you have a price target, and you have some idea of a conviction of what you think this is going to do. So going over to Etsy, let's go over a few things quickly. Fundamentally. Now again, catalysts can exist in all different forms and shapes. Again, we want material catalysts. I'm not looking for subjective opinions saying, hey, look, my wife uses Etsy, so I must like the stock. That's not material information. Material information are things like share buyback, CEO changes, asset sales, or if you look at the financials. When you look at the financials here on Etsy, it's not necessarily accelerating, but it's not losing either. It's a steady cash flow business that produces a shit ton of cash, okay? This is massive. This isn't a company that's struggling. Again, yeah, the stock sold off a little bit. They have a ton of cash on the balance sheet. Gross margins are re-accelerating. We want to see this. We think this is going to continue to re-accelerate. Debt's up a little bit. Total assets are down and revenues are pretty much flat, okay? There's nothing wrong with this. This idea doesn't have to be the next Amazon. It doesn't have to be the next Coca-Cola you own for 50 years for dividends. This is a tradable idea. Now, whether you get it for 15%, 20%, or you get it for a double, the point is you've just generated a trade idea, okay? So this is Etsy this week. There's some notes here I wrote in the article of the week. I said you can read Morningstar, Zacks, or even Yahoo Finance article to see why you should care about this name, but none of it matters until you have a process of what you look for. This week, it was highlighted as the top idea to watch the trigger from the swing monitor, and it did trigger. In fact, I've owned this position for quite a while, and I actually think I talked about it in a post this week for those of you that actually took the time to read it and understand it. In fact, it was right here. It was called Why Idea Flows Matters. So we're kind of rehashing what I talked about in this post a few days ago, but I'll pull this up for you guys here. And literally, I walked through here, went through the catalysts of it, went through the charts, and then walked through my entire position that I own. Okay, so for those of you guys that have access to this, the equity position, the options position I owned, all of that was there for you guys to use. Okay, now when you have an idea like this, you have to understand what gets you into a position. For me, because this is more of a long-term position, it's not a trade like OKLO. It's not a trade like HIMS that I have to watch. I treat this a little bit differently. And as I treat it differently, these options here, you can't see it, but for those of you that have access, you can zoom in. These are January options. They're longer term. I actually own the equity as well. I don't expect Etsy to be a 2-day trade. I expect this to be something where I'm getting 30 or 40% out of it. I'm already up on the equity position, I think 15 or 16%, and the options like 40 or 50%. Okay, so this is what I said here in the article. I said I'm already long this position because I don't have the need to be exactly right on this trade because it's not a trade or short-term trade. I'm after at least a double on this. However, you can wait for a trigger to put on a new position this week if 62s break, or you can just come in and start buying this position. You have to make that call, and this is part of why using this report is different for each person. And I'm going to show you that later as we get into some of the P&L highlights this week from members. And obviously this week, Etsy kind of had a pretty strong move, and we'll go over it quickly and talk through a few things here. Okay, so if you zoom out on this particular chart, and I know some of you aren't fans of this. Again, we like to look at these things. And for those of you that are new here, I started my career as a futures trader, so I had to learn about price action and charts, as well as the fundamental stuff that we look at as well. First and foremost, there's nothing bearish about this monthly candle. Okay, some of you don't believe in this stuff. Some of you don't take the time to learn it. Again, you can do what you do. If you're going to do this seriously, and I've told my interns this, you need to learn multiple disciplines in this business, from price action to technicals to understanding balance sheets to understanding portfolio structuring. There's a lot of things that go into this, unless, again, you're just somebody that's doing this part-time and not doing it full-time like we do. So this is a pretty solid sign on this. Obviously, it's been down on this, and we're looking at this particular, their name to make it into the report. You've got to understand, why is this happening? Okay, obviously something happened here, but then something pretty bad happened here. Now, what is it that happened? And the answer is this. It's not something you're going to pull out of your ass, so to speak. It tells you in the earnings reports. Just like Vans last earnings talked about what they were doing with, or VF Corporation talked about what they were doing with Vans. The answer is always there. It's your job as somebody that's generating idea flows to figure out that answer. So we understood the answer. We understand some of the changes we were making, hence the gift program we talked about. We think we're going to get re-accelerating revenue and also continue to see margins expand. Okay, so this week, if you're somebody that wasn't in this position, you could have triggered into this particular long. Okay, I've been long this because, again, I'm not trying to time the position. It's something I plan to own for hopefully a double. We'll see depending on the next earnings report. So again, if you're a user of the report, you can come in, you can see some of the catalysts and keynotes. And like I said before, we're not going to get every catalyst in here for you, but there's catalysts that we think matter. Okay, you have the share buyback, you have FCF we talked about, niche marketplace, we talked about revenues, we talked about the losses, et cetera, et cetera. There's also links you can look to understand a few things here. Okay, the price action commentary this week told you 60 to 62 are key levels on this. If it breaks, it triggers a new long to soft targets that are 68 to 70, which I think happens given the tailwinds and the weekly chart setup. I know this is a long-term hold, but for short-term traders, this can be used to trade this week if those levels break. 56 is hard support. Okay, so in this particular idea, you have the information driving the idea, you have the price action commentary, and you have the targets as well. This is how you generate idea flow. Nobody has a gun to your head saying, hey, look, you have to put this position on, or you don't. Some people put it on long-term. I'm going to show you here as we get to the P&Ls this week for some subscribers. Some put it on short-term. And that's where it deviates in the process for each individual user of this particular report. So the third and final idea I want to get through this week is OKLO. Obviously, this is a name that, again, I talked about earlier. Some people like, some people don't. And I want to give you some insight to this. This thing made my radar, not because I'm a fan of the company. In fact, I just showed you the FCF earlier. I think the balance sheet is reprehensible. It's not something I would invest into. I want to say it was back in February or March. Somebody sent me an email on this. I looked at it briefly. And normally if you had caught me in 2020 when everything was doing what you're seeing now in these shitco's, I probably would have just laughed it off. And I probably would have ignored it. But what I started to do is I started to go and look and see how this stock was trading. Okay, not necessarily about the sector, the financials, the potential contracts the company was going to get. None of that made sense to me. When I started to look at this particular, profile of this company, the volatility is pretty insane. For those of you that have been around this business for a long time, and for those of you that were OGs of some of the work I put out years ago, from 2012 to 2016, there was a stock called Priceline. Obviously, you see the Priceline Negotiator. The ticker symbol back then was called BKNG. That stock's options chain was incredible to trade because of the way that stock moved. Today, the options chain is pretty much as dead as it gets. When I looked at OKLO and I understood how this thing started to trade with the volatility and the options, I go, look, this is going to be a trading sardine for us. This isn't an investing vehicle. It's not something I'm willing to bet on the future on. Now, again, you get a lot of people out there that are invested in this. I'm not running $20 billion. I'm not worth, $100 million bucks yet. If I had that kind of cash, maybe I'd throw $1 or $2 million at this and I'd let it sit. But we don't. So I take the approach of let's use this as a trading tool, not an investing tool. And that's what we've done for the past 2 or 3 months. We traded this move higher. We waited for this pullback. I traded it last week in New York. And again, this week, we traded this all-time high breakout, which I'm going to get to next and explain to you what that means. So last week as well, in this particular name, for those of you guys that were watching the video cast, You had an upgrade from Cantor Fitzgerald. They gave you an overweight rating, effectively saying, okay, look, you should overweight your holding on this for whatever reason, okay? It's not necessarily a big thing for me to pay attention to upgrades or downgrades. Obviously, we look at them and see the timing of them. It doesn't make or break my position, okay? If a bank comes out and downgrades a stock, doesn't mean anything to me. I'll give you a quick story. 3 years ago, you had the SVB situation. All the analysts out there were downgrading Charles Schwab. Charles Schwab has just made a new high since 2022. They just did a $20 million share buyback literally as of today, and they were wrong on that. So again, once you get good at this and once you do this full time, you learn to trust your own process and you ignore the news. However, this obviously is going to help the stock in my view. We talked about it last week, but that wasn't the reason it made it into an executable trade idea. This is what I wrote earlier this week. I go, OKLO above 65 is going to rip. You need to see the first 30 to 45 minutes of flows today, but rip. It obviously did rip. I go 65 is okay, still matter, but above that we're going to see Momo. For those of you that only do highbrow finance, I'll tell you the joke here in a second what that means. This won't be for you. Go buy some treasuries and tell your wife's boyfriend you skipped the idea and tell me how you really feel. And again, I was caffeinated. This is the markets, and yeah, I'll leave it there. Okay. So this was a momentum play. It was price action. It was also an all-time high breakout setup. This matters. These are actual catalysts, in my view, that are going to drive a trade idea. Now, for those of you out there that are only fundamentalists, value investors, etc., none of this stuff is going to make sense to you. It makes sense to me, again, if you understand the context of where I'm coming from. I spent the early part of my career as a futures trader, trading literally price action, trading the S&P, trading the DAX, trading oil. So this stuff is like second nature to me, just as looking at financials are as well. I go, that's it. Nothing about the financials makes sense for me, at least now, but that doesn't matter when you get a technical setup with these characteristics in play. It also didn't hurt that it had an upgrade last week, and general sentiment is bullish in this sector, which it is, by the way. Whether or not they're financially going to make it doesn't make a difference. The point is, here and now, they represent actual trading ideas. But trading a name like this is not that easy, unless you want to buy it and leave it because you have long-term conviction. I don't, so it's just a technical trade. And this week in the report, this is what I said. I go, this had a great week last week, and I pulled down some change on it on Tuesday, and then again on Thursday. The monthly chart is bullish, and 80s can print, maybe more, but remember that the order flow here is tricky. So you have to watch it closely and not get too heavy on the size, and then walk away from the desk. So make sure you read the notes here, etc., okay? Now, obviously this week, we'll pull up the chart here and talk about some of the moves on this, and then I'll break down these three ideas as they all compare to each other, okay? So obviously earlier this week, one of the things I was talking about was 65s breaking, okay? Now the first 30 or 40 minutes matter in the order flow of markets. I'm not going to get into a full in-depth explanation on price action in this video or my takes on it. The point is, you had a pretty big move that morning. It pulled back, shook out a lot of longs. Literally here on Thursday morning, you had another move higher to make an all-time high, okay? But what made this idea make sense to us? Well, I talked about the high time frames. When we're looking at technical ideas, again, for those of you out there that haven't taken the time to add price action and technicals to your arsenal, again, you probably should in some sense. There's nothing bearish about this candle at all, literally at all. And this stuff matters. This tells the truth. And for those of you out that are non-believers, again, I'm not here to convince you. You can go and look at some of the futures trading greats, Bruce Kovner, Paul Tudor Jones, Jim Rogers, even Stanley Druckenmiller. All of them in some shape or form talk about charts and price action if you actually care to listen. So this week, as we came into this, when you get an all-time high breakout, typically you're going to get either trend systems or price action to follow. You got this breakout here a few weeks ago. It broke out to new highs, and then it pulled back. Well, then again, it paused, and it broke out again. So I'm one of the, I guess, investors that takes the approach of, I want to anticipate where price action is going. For those of you that are hockey fans, you have the saying from Wayne Gretzky, you skate to where the puck is going, not where it's been. It's the same thing when you're looking at potential trades in technical frameworks. I'm not going to wait for this breakout to happen and say, okay, look, I just got a breakout on this stock. We're making the assumption based on the tailwinds we already understand. There's a lot of tailwinds with this company. Obviously, the options chain is moving crazy, which is therefore going to drive a lot of equity flows. The sentiment's hot in this sector. The weekly candles are bullish. The monthly time frame's bullish. I don't need any more information to tell me this is now ready potentially to break out. So in some sense, yes, there is some speculation there. Does that bother me? No. Again, I started my career as a futures trader. Price action moves quickly, so I'm used to this type of flow. If you're somebody who's a value investor not used to this thing moving quickly, you don't have to take this idea. The point is, this report has 30 plus idea generation tools to go through. And this is why this week in the report, I said, be careful with this because it's going to move and it's a little bit tricky. And obviously it did that. You had a big move on Wednesday. This pulled back pretty violently and then literally off the open it moved. And if you hadn't paid attention, this would have moved without you. Okay. So again, this is kind of a breakdown this week in this name. Am I going to hold it long-term? Probably not. Will I continue to trade it and rip it for gains? Absolutely. And in fact, in our Q2 letter to our clients, I think I actually mentioned this name. And I said, look, if you look at your portfolios, we've traded a lot of this particular name. It's reprehensible, but as long as the market's going to allow us to trade it, long and short, by the way, I want to be clear, we're going to continue to do it. Okay. So that's that there. Those are 3 ideas. Let's kind of wrap this kind of section up and talk about the next point. But what really matters? Is it finding net nets? Is it macro flows? Is it breakouts? The answer is it's subjective to each investor. You already know my views here, and our views in this report is that we provide you idea flow of all sorts. And that's the reality. When we build this report, it's not just designed to just find value investments. It's not just designed for 52-week breakouts. It's not just designed, again, for swing trades. There's a lot of idea flow that goes into this. So as a reader of the report, you can find ideas you like and don't like. And nobody has a gun to your head saying, hey, you have to like this or you don't have to like it. At the end of the day, your job as an investor is to generate idea flow. It's not to argue with others, waste time talking about hypotheticals. You need to generate idea, put risk on, and then make P&L from that particular idea. So whether it's OKLO momentum or Etsy buybacks and revenue increase expectations, it's the idea flow that counts. And I wasn't shy about sharing my views this week on Twitter. If you guys follow me, again, maybe it was a stress of, this was actually the day of the surgery. So maybe it was stress of the surgery. Maybe it was emails that I got this week. Maybe it was a culmination of things. But this is what I said on Twitter. I said, all you guys worrying about value investing like you're Warren Buffett when you have $50,000 are going to end up broke and writing articles for Seeking Alpha and stuck on Twitter with a fake name LARPing as a baller. You need to trade shitcodes and leverage ideas with options, ideally deep in the money or leaps, even small. And this is what I'll tell you guys out there that say, I don't know how to use options. Look, this isn't 1965 anymore. You have AI, you have YouTube. If you want to learn it, you can. There's really no excuse. The second thing I'll say is this. You can use 1 or 2 contracts at a time. And I highly suggest doing it just to get your feet wet. Number 3 on this. The reader of the report below, which I'll go to in a second, runs $1.1 million of his own cash and is up 20%. I don't know if he's up or more. I'm guessing where he's at for the year from our last discussion. The longer you think you're above this type of stuff, the worse it's going to get. For the record, he's been around for 8 years. He was here before, took a break, and he went to live from somebody else, more macro nonsense as well. So leverage your money and trade your bankroll, not the bankroll you wish you had. And this is one of the moves this week. I posted it. It was a stock called IREN. I'll talk about it later. I think I talked about this. He said I talked about in episode 73 or 72. We didn't put it in the report, but he must have taken it from the show. And a lot of you watch this show, by the way, and I get emails from you guys, and you guys make money from this. And either subscribe to the research or eventually you'll become a client that we manage money for down the road. Either way, we do this to give you guys insights to what it is we do, to share highlights of the report for subscribers. Okay, so he made this move anyway. Somebody replied to this and made a comment about options. The point is this. It's not like he went out and traded options. He understood the catalyst of the company. He understood the price targets. He just chose to structure the idea with options. Even with $1.1 million as a portfolio, all he's been doing the past few years using leaps and deep in the money options. Okay, so that was a tweak this week about the talking point of how I view when it comes to idea flows. You could have easily traded the equity, but he chose to use deep in the money. And like I said, whether it's Etsy or OKLO, the idea process stays the same. You have to have a target price, an expected holding time, catalysts or tailwinds driving the idea, and then notes on the general price chart. Without any of this here, you don't have a trade idea. You're like every other armchair investor out there that I get texts from or emails coming in asking about irrelevant things. And 90% of the time, the questions that I get are irrelevant because there are people asking these questions that haven't codified a process that they can generate idea flow from. It's a process you need. And the longer you do it, the easier it gets, just like riding a bike. And so what I'm going to do is I'm going to share somebody that sent a tweet with me and give you guys some insight. When I was very, very young, 16, 17, before you had YouTube and everybody talking about macro and writing newsletters and Twitter spaces, there was very few information you can get on finance. One of the first people I found out about was Steve Cohen at SAC Capital. And so I studied everything he did. In fact, a stock they had in their portfolio, for those of you guys that are real OG investors, called Denadron. Valiant Pharmaceuticals ended up buying them. I bought Denadron back in 2005, 2006. I think I made like $50,000 on it when I was in college. The point I'm making with this is I studied what he did from his interviews. And I said, look, why is this guy successful? And I studied a lot of other investors as well. Some of you guys from this story, when I was a freshman in college, I was able to get my hands on Seth Klarman's margin of safety for literally $20. I ended up selling it for like $2,000, I think it was. But I've read a lot of these pieces. One of the pieces that's always stuck out for me is Steve Cohen. And this is something somebody sent me on Twitter, and I want to give you guys some insights to this. This is Steve Cohen's preferred write-up format. It has the name of the company, the target price, the time horizon, conviction rating. Again, I don't really use this. Details and catalysts. Okay. Without this, he would not consider an investment idea. This is from a book. I'm not sure what book it is, but let's go through it and read this here. The write-ups follow the prescribed format with the name of the stock at the top, followed by target price, where the portfolio manager thought the stock might go, the timing that was suggested for the trade. The most important part was the conviction rating, a number of scale of 1 to 10 that conveyed how certain the portfolio manager was about what he was suggesting. For those of you out there that have watched the show Billions, in part, allegedly, Axelrod was supposed to be Steve Cohen. So there's a scene in there where he goes, you know, what's your level of certainty? He goes, I'm not uncertain. Okay. And that was kind of based loosely off this idea of their conviction rating. So Martoma was one of the portfolio managers, I believe, that went to jail during their insider trading scandal, et cetera, et cetera. But back on June 29, 2028, he sent an idea to Steve Cohen from Elon with a target price of 40 to 50. The stock was trading at 26. I'd look at something like this and say, hey, look, instantly, we're trading 26. You've got a target of 40. That's about a 50% potential move. That's appealing to me. The next thing I need to know as a PM, and I've been a PM, I run money today, is why is this move going to happen? Tell me the catalyst. Once I understand that, I take the idea, I look at the price chart, and I try to figure out, does this make sense to me? The final step of that piece is, how do I structure the position? Am I buying equity and deep in the money? Am I buying just deep in the money or leaps? Those are questions that are nuanced, and I'm not going to get onto the show with you guys this week. Under catalysts, where the events he expected to happen move the stock price higher, he would write basically what the catalysts were, and end of it, he would obviously give his conviction rating as well. Okay, now whatever you think about Steve Cohen, whether insider trading or your preconceived notions, the idea here is that there's a process for developing idea flow. And that process is the same approach that I've taken in my career and the same approach we take in the report to generate idea flow over and over and over. Every time, I'm going to wrap this up here, every time I talk to investors or people that pitch me ideas, they never have this. They give me one piece of information or one thing, and it's so amateur hour idea flow generation, it doesn't make any sense. Without any of this stuff, you don't have a chance rather to put an idea on, and this is important for us. You can ask folks you see in the P&L highlights here each week to give you a trade idea, and they could articulate it in this matter in less than 2 minutes each time, every time. Even if they take most of it from the report, at a very minimum, they could sit there and tell you, just like he did in this position, why he bought these expirations, why he sized it this way, and what his targets were. Every single time, over and over and over. And this separates amateur investors from people that do this successfully over and over. It also separates a crowd out there that's always constantly watching CNBC or reading newsletters or subscribing to generic stock reports that don't do anything for them, but it makes them feel like they're doing something. Okay. And that's how I really feel. And that's some insight this week to using the report. Okay. Those are 3 different ideas for you guys to kick off the show. We're about 40 minutes here. The next part, I'm going to walk you guys through our P&L highlights this week. I'm going to take what I just talked about, and I'm going to incorporate it into the rest of the video cast this week. All right. So if you guys see some of the same names up on here, and again, some people are private, some people share. The reason you see some of these names up here over and over, and I can tell you this here and now, they've all been around for a while. He'll be at the conference we're hosting in November. Brandon will be there as well. Matt's been around. He's one of the OGs back from 2017. There's a group of folks that actually take what it is investing and trading is to heart. And this is why they make money doing this. And there are a lot of people that do it. These aren't just the only people. I'm sure there's other investors out there who make tons of money. And a lot of people don't talk about it online, etc., etc. I do. It is what it is. Okay. This is a position he had. I ran here. He talked about it there. He said, I got it from Dan's podcast, 73 or 74. For whatever reason, I probably didn't like it enough to put it in the report. Not a big deal. There were 15 other plays. This is episode 78. In the past 4 weeks, it made sense. Okay. This is Brandon from OKLO. Obviously, I talked about this earlier with you guys. Just a couple of double ups was out last week, so just catching up. And I can tell you this, I know both of these guys' styles pretty well. He's not necessarily a short-term trader. He's more swing trading, very, very analytical. He's one of the people in our Delta One community that actually sends out additional research on his own that he does, and he shares it. And that's part of our community. Again, I only have so many eyeballs, so many time to do things, and he shares a lot. So does Matt as well on some of his ideas. Okay, so this was Matt this week. He was on Etsy. Again, I own Etsy for the long term. Obviously, he doesn't own it for the long term. Not a big deal. He has his own prerogative, but he took the same idea. He took the trade and put it on and made some money on that. Okay, we have Ron again this week. Even though he had February expiration, I took it off after 7 days for a 10,850 gain. Hopefully at the November conference, I can refine expiration dates. This ticker symbol is CALM. And I posted this on Twitter. I had somebody reply to this with a comment saying something in regards to, all the billionaires are investors. And if options are great, why does everybody lose money from them? In my view, that's just standard projection. What they really meant to say is, why do I lose money from them? And the reality is they lose money because they don't know how to use them or generate idea flow. And again, it's not that options are a strategy. It's that, again, he talked that this is a trade he put on, by the way. He sold it yesterday. He bought it 7 days ago, which was 1, 2, 3, 4, 5, 6. So one of these days he bought it. Okay. So let's talk about what I just explained to you guys in this show this week. I don't know why he bought this. Okay. I don't cover this. It's not in our report. I'm sure he could tell me if I asked him. I don't know. Okay. I don't know the tailwinds in this company, but clearly he bought these options for February, which is 8 months away. Okay. So I'm assuming, because I know him and I've trained him, that he bought February options because he expected whatever catalyst or catalysts he was looking at to take time. I don't think he bought this saying, hey, I've got to get this right tomorrow or in 2 weeks. Now, obviously, he had earnings here. I don't know what the earnings did. Thankfully, he sold them because they pulled back. But something happened and it was up 20%. Okay. And he made a judgment call. So even though he bought the options in February and sold them, he still made close to $11,000 in the position. All right. So in his process here, it's not like he just woke up one day and was like, oh, I want to trade options on this because I saw some unusual call flow or because of MACD. There's a catalyst there driving this. There's a price target on the position. And then he specifically structured the idea the way he did because of his analysis on the idea. And that's what made him money. And this is a process that repeats over and over and over. I've seen his portfolio, he sent it to me, and he's been crushing it year after year. Okay. And for those of you that are skeptics out there, I know you guys see this stuff and you think, okay, oh, they're getting luck. They're not. Okay. This stuff exists. There's groups out there that do this. There's people that make a ton of money doing this. It's just all about who you surround yourself with and whether or not you actually want to make money. That's the hard truth that I believe. Okay. So that's that there. This is Matt this week again, hitting it up on OKLO and HIMS. Obviously, we talked about this already. I think a lot of you also posted P&Ls on this. If I didn't get to you, that's my fault. A lot of you crushed it this week. It's not that I'm ignoring you. It's just that there were a lot this week, and that's always good. Okay. This is Ed. He was long Restoration Hardware with August contracts. In fact, this was in the report, and I own this too. The difference between me and him is this. I own this a little bit differently. I'll explain to you quickly. I own, I think, March. In fact, I'm just going to look for you to tell you. I own, to be clear, not that I'm obligated to, by the way. I own this in the fund for clients. I'm obligated to my clients on both price targets on our positions and our portfolio positions. I'm just sharing with you guys in this show. I own the January 2026 200 calls. Okay. They were $4,800 a piece. Okay. So I traded a little bit differently. Now, again, if you're asking why I traded this, some of you guys want some fundamental idea. Again, not every investment has to be the next Amazon. I cannot stress it enough to those of you guys out there that have been programmed to believe that every time you put money at risk, that you need to make it be some record-breaking or some groundbreaking fundamental analysis nobody else has discovered. You don't need to do that, okay? And if you can break through that mental wall, which I think a lot of people have, I think it's easier. This idea for me is pretty straightforward. We talked about a few ideas here. 200, 205 is the area this week that needs to clear to trigger a long on this name. If that happens, 214 is a soft target. Again, every idea has a target, catalyst driving it, etc., etc. If that breaks, we're on the verge for a bigger move, maybe to 230 in the daily charts. You have catalysts here. We talked about paying down some debt here. China sourcing, obviously we know the issues with tariffs, etc., etc. For me, this is part of a tariff recovery play idea / part a technical idea. And we'll go to the charts and pull this up this week and have a look at this. Okay, so 200, 205 this week was key as we came into this. This would have been, this is Thursday, Wednesday, Tuesday. This is Monday. Okay, so we cleared. You had a pretty solid move here on Tuesday into 211s. We traded to 223. 214 was a soft target. We hit that plus some, and we pulled back a little bit. Okay, so where he sold this position here, I still own this because I think, again, I have price targets that are a little more aggressive at 260, 250. I own the options for January, and I have time. Okay, they're deep in the money. They're 200 strikes down here, and we're at 212. Okay, so the position's profitable, not by a lot. What am I up on this? Give me a second. RH. I mean, very little, maybe $1,000 or $500 in that contract, not much. Okay, so again, this is a longer term position for me. He took the position from the report and traded it a little bit different, and that's the point. Again, for those of you guys that have read this new section we put up here, how members use the report. Everybody uses it differently, but the point is there is idea flow for you to generate ideas. Okay, so that is that. That's the first part of this week's video cast. In fact, I'm going to go through a few other things. We're at 50 minutes. I'm going to get to some of the Q&As this week and talk about that. Okay, so again, everybody uses the report differently. The point is you need idea flow, and hopefully you guys have seen in this week's video cast here that you need target prices, time horizons. We don't use conviction. You can add it if you want. The details of the idea and catalyst as well. Okay, and to be clear with this, even going back to OKLO, there's not necessarily a big financial fundamental catalyst. It's more of a technical catalyst. And technical catalysts are okay. Nobody's going to come and arrest you and say, hey, look, I'll tell you the joke here. I just thought about this. Nobody's going to come and arrest you and say it's not a highbrow finance idea. And I'll tell you the joke behind this. Earlier this week, Coles got squeezed, okay? And I talked about this back in March. I don't have a 50,000 person following on Twitter. I bought a small position, speculative, to see if there was going to something come out of it. And I'm not that, again, I like the balance sheet, but not enough to size a position. Anyway, it got squeezed this week. Somebody bashing the guy who talked about it. All he did is point out the short interest, by the way. And he goes, this guy's definitely not involved in highbrow. I thought he was more highbrow finance. Okay, I've seen this time and time again. Normally this type of stuff comes from new guys to Wall Street that are young in the business, that think Wall Street operates a certain way. Look, I've been in this business for 2 decades. Let me tell you guys a little secret about this business. Most people that do this business aren't who you think they are. A lot of these guys are morally bankrupt. They're scumbags, to say the very least. Okay, if you guys haven't seen that already in some of the management and the shit companies out there, wait till you see it on the folks on Wall Street. Okay, so this idea that highbrow finance is a thing is a joke. And I made a joke to my buddy this week back in New York because he's been trading OKLO as well. And I told him about this. And I go, look, he's getting ready to buy a Ferrari. Slight flex here. And I go, when you go to the dealership and you go and buy this thing, they're going to ask you, they're going to go, look, did you make this money from any highbrow finance deals? And when you tell them no, they're going to say, look, sir, sorry, you can't buy this Ferrari. Please take your business somewhere else. And obviously I'm joking and being sarcastic here. And the point is this: at the end of the day, your job is to make money. It's not to pretend to be right, sound smart. You need to generate P&L. If you're not generating P&L, it's all pointless. You might as well find another hobby. It's not as stressful as this. and do something else. Okay, so that's that here for this part of the show. Let's get into the next part quickly, and we'll get into Q&As. All right, so I'm going to skip the headlines this week. None of this stuff really interests me anyway, except this one. The only reason I care about interest rates cutting, which I'm just going to explain to you now. Okay, this is from Spencer Hackerman on Twitter. Some of you guys like him, some of you guys don't. I think he's funny, and at least he's entertaining. Okay, all the real data is saying the economy is rapidly slowing. Again, this is another point of this here. I don't care what this says. Okay, the economy slowing has no bearing on some of the turnaround plays we're invested in. It has no bearing on OKLO. It has no bearing on technical driven ideas. So this stuff, it takes this out of the equation. For those of you guys out there that are constantly worried about this stuff, you don't have to worry about it unless, again, you're a pretend hedge fund manager running $5 billion LARPing on Twitter. Home builders are slashing prices at the highest rate in 3 years. This is expected as rates remain high. You had earnings this week from DR Horton. DR reported earnings this week. Revenue was down 24% on net income. Less revenue, less income, revised guidance, et cetera, et cetera. Obviously, this stuff is expected. Do I think these stocks are short? No, and I've told you guys before. I've said it on Twitter this week. I think there's so many good long ideas. Trying to sit there and short things for pennies is a waste of time. But again, what do I know? I'm just a lowly turnaround investor and technical trader. Okay, builders are probably good for a trade here in the next 2 quarters. But when rates drop, they're competing with all the other inventory. It's going to come on the market as well. It's not an issue of housing will not perform, but an issue of how do we make money from the housing sector at large. From there, we can look at new ideas, and we have. So I see information like this, and obviously this business is all about how you process information and then generate idea flows from said information. Some people look at this stuff, in my view, and say, look, home builders are short. I don't want to own them. I look at this stuff and say, okay, look, what's going on with the sector at large? Houses are coming online. I look in Phoenix. I look in certain parts in Kauai. My friend just bought a place there, and houses are popping up everywhere. As this stuff comes into the market, it's just going to add to the supply. So then you have home builders building homes. What do you think these home builders are going to do? They're going to have to compete and fight each other and wage wars on price to compete for new clients to buy their homes. Now, obviously, there's going to be demand as well. You have millennials and Gen Z waiting to buy homes for the first time. My point is this. I don't think the war is going to be won in trading the home builders. I think the war is going to be won on buying the ancillary companies. Maybe it's restoration hardware. Maybe it's other ancillary companies and roofing companies like QXO or Brad Jacobs company. Maybe it's a housewares company. There's other things that are going to benefit the first-time home buyers because of what you're going to see in this sector. So if when you take headline stuff like this and you only see it from one perspective, you miss out on generating idea flow. I've been trying to teach this to our interns recently, and obviously we've already started to generate ideas. I'm not going to talk about them with you guys in the show. Those are proprietary for our clients we manage money for, and we've already begun to put money to work there. Okay, this is also from Liz Ann Saunders there quickly. I'll let you guys go through this here. Median home price down to 401 versus 422. Again, I think the next 4 or 5 quarters when we get a rate cut, if you're a real estate agent, it's going to be your time to shine. Also, if you're in mortgages, it's going to be your time to shine as well because, a lot of this stuff's going to start to pick up. And again, I've said it before in this show, can you buy these names? I talked about it a few weeks ago. This was a pretty key price zone for those of you that are into that stuff. Yeah, it got a bounce there. Are they good for trades? Yeah. Are they good for 2-year holds? I don't think so. Like I said, I think there's better plays, and we've tried to identify those. Okay, I'm going to leave this for those of you guys that have access to this on VF Corporation. There's an update there. Next week on this show, I'm going to go through updates on earnings and do something different next week because it is earnings season and there's a lot to do. Okay, so that's that there. I'm going to go through Q&As this week. There's not as many questions this week because we went through a lot last week that I was backlogged on, or 2 weeks ago. I don't remember when I did it. There was a question that came in earlier on Deckers. And I just forgot we covered it in the report, asking me about price targets. So one of you asked me about price targets on Deckers because the stock was up after hours. And maybe this show will stop me getting those questions, okay? Because literally, we'll pull it up here. I don't know what Deckers did. I know it was up. I haven't looked at the earnings report. In fact, I got a text from one of the analysts, Charlie, this afternoon. Kid's a rock star, by the way. He asked a question this week. I'll go over. So this was up 117. Looks like this is a gap fill, by the way. I kind of looked at it a few weeks ago. So you get this after hours, asking about price targets on this. Okay, let me go to the. I'm going to point you to the whole point of the report. To make a point here. Deckers. Let's go through this. Okay. So again, I don't necessarily care about this name primarily because I'm already invested in Vans, and I have a lot invested in that. I've talked about in this show. Okay, so this was a link this week at earnings, things that you needed to know. These are Hoka shoes. By the way, I own a lot of Hokas. I love those shoes. And there's a lot of catalysts. Okay, revenue records up 16% year over year. Hoka and UGG brands driving growth. It tells you some catalysts there. Massive share buyback program, by the way. Ton of cash in the balance sheet. A lot of stuff going on with Hoka. Obviously, I haven't listened to the earnings call yet. I need to listen to it and see what they said. Maybe one of you that are in Delta One will be so kind of listen to it and share it with us what happened, because it's earnings season and I only have so many eyeballs and time in the day to do it. Had a great recovery off the lows last week. Maybe it continues this week and does 102 triggers the long to soft targets at 116 and then maybe 115. So the stock does have earnings this week, so this is something to watch. So again, you have catalysts here, you have price targets. So to your answer of what is a price target, your answer is there. It's 115. Okay. And again, that should never be a question. It's just, again, this is a good episode this week as I record this to highlight this. Without a price target or context, you have a trade idea that is not executable. All right, so that's that there. Let me go over, there's an emails that came in this week that I'll cover quickly with you guys and go through that. Give me a second. Let me pull this up here. Give me a second. There were two emails that came through. One was from Gianna, which I'll reply to, but I'm going to go through a few things. Give me a second. There's another one here from Darren. Hey, Dan, thanks on HIMS. What are your thoughts this week about the potential, what does it say? Lawsuit on the company. Does that affect your price targets on the stock? Look, yeah and no. I already took most of the gains on this. Again, on that particular idea on HIMS, I don't remember what the price target was exactly. I talked about it in the post. But then again, on HIMS, when you get a 17% run like that, you know, I'm booking gains. And like I said before, we hit targets on this. In fact, let's just pull up the report on this. Why does it always hide? It always hides a report. It's so weird. My thoughts on it is it doesn't matter, okay, to me. Okay, it might matter to people that are holding it long term and they've leveraged their entire portfolio into one idea. They need it to work and they can't sleep at night and they wake up checking things on Twitter and quotes because they don't know how to generate ideas and all eggs. That might matter. It doesn't matter to me, okay? 60 is a price target. We got to 60. I'm out of it, okay? And if we get above 60 again next week, you know, we got to 60s. I was out of it way before this, by the way. Maybe I'll get long it again. And I'll keep trading it this way. I'm not investing in this thing long term. This is why the news doesn't matter to me, because I just don't treat this stock that way. And that's a big deal. Hopefully that makes sense in regards to that, okay? There was an email from Jana. Let me go through this here. And you were very nice to offer. She is a nurse to come out to Arizona and help with recovery with my dad. Thankfully, we got that covered, but I appreciate your offer. Genuinely, I appreciate it. And I got a lot of messages from a lot of you guys. And in fact, I didn't get to meet up with a few of you in New York last week. That's my bad. I might be back literally in a week or two on the way back to Puerto Rico for a friend's bachelor party. And if I do, I promise I'll reach out to you guys. It's just, I was stuck on Long Island and I was busy with the market last week and I wanted to meet up. And again, I don't know. There's a lot going on. Okay. This was an email she sent in. Thank you for these reports. The LongVol Report is my Sunday Bible reading. Not in the room too much since I have 2 camping trips this month. Private notes here, yada, yada. I did sign up for November. That's good. Hope your dad, that's your offer to help him. I appreciate that. I made 500 on HIMS today and have a couple leads on OKLO from a couple weeks ago. I plan to hold. Should help me pay for my cruise. And that's great. I like getting these emails from you guys. You don't have to use a chat room too much. It's not the point. Again, everybody uses the report differently. You guys find ideas you like. You put the ideas on. Some of you guys use this actively and you trade. Again, everybody has different uses, and that's the point of this. It's not one size fits all. Okay, so that's that there. I also got a text from Charlie this afternoon about a few things. I'm going to go through that here. Okay. Hey, Dad, I went and updated the full swing monitor tape. By the kid, this kid's a rock star, by the way. He was responsible for a lot of these changes here to make it cleaner to read. My question for you this week. Oh, I'm sorry. He already updated deck, by the way. Great. So they had a double beat. I'll look at that this after this here. My question for the week is this. When do you think these euphoric price levels are going to come to an end? What do you see happening to the SPY and QQQ into the next month? Look, here are my views on this. You're in earnings season. Earnings season typically, you're just not going to get a lot of volatility in the S&P and the QQQs because you're waiting to see what a lot of these companies are going to price. Now, obviously, the multiples of the S&P and Qs are pretty extended, and a lot of the weightings right now, obviously, again, weighted towards the Mag 7 stuff. So I don't think you're going to get a lot of movement until earnings are done. Okay, from a technical perspective, I don't know. Maybe you're trading 580s on this from a fib perspective, but I don't know. On the SPYs, you're just breaking out. I don't think this is bearish, but again, to be clear for those of you guys new this week, this isn't what I do. I don't make predictions on the S&P direction. I don't call market tops. It's not what we do. In our investment partnership, we do a lot of turnarounds investing. We look at stuff like Etsy or VF Corporation or GXO or a certain event. This has no relation to my world, okay? Now, obviously, when things get heated or overheated, so to speak, and I think the market at large is going to have a 5 or 10% move lower, of course, it's going to pull down other positions, and we'll take measures to protect that. Maybe that's buying spreads on the SPYs, maybe it's a Qs, but a lot of what we do as well to help offset portfolio positions is we trade actively on certain positions, OKLO, HIMS, etc. So a lot of that stuff, we generate a lot of P&L is part of our internal business at the fund, and part of it's investing as well. Okay, so again, this is complex for those of you guys listening this week. We're not just sitting there buying and holding a dividend portfolio and making YouTube videos telling you about how I get dividends. Okay, this is the approach we take. So the answer to this is, I don't know. I mean, I wouldn't be buying the highs up here in the SPYs and Qs. Thankfully, our mandate isn't to buy the SPYs and Qs, so I don't have to worry about that. But if I had a gun to my head, which I don't, I'm not buying the highs. I'm not shorting them either, to be clear. Okay. Second question. Also, what do you think of the setup on AMD for mid-August calls? That one is more specific, but if you want to cover, I'm curious. Okay. I know you talked about this earlier, and I'm talking to you because you're learning as well as Nathan. Look, you guys want to be specific with your idea selection. Okay. When you guys are looking at ideas, be specific and be willing to cherry pick. Okay. The idea of finding a best idea is subjective, but as you get used to doing this, you'll become more picky with how you use your capital. I'm picky. We look at long-term investments, and you get to see our portfolio. I'm talking to both of you guys that are watching this, listening this week. We're picky with our investments. If we're looking at long-term positions, I at least want 30%, at least. If I'm looking at trades, why would I fight for pennies trying to time a 0 DT option on the SPYs when I could trade OKLO or HIMS or Coinbase for 10, 15 point rips, or Hood for 20 point rips. Okay. The point is with this, I like this setup. The weekly looks good to me. I would be a little bit cautious on my position sizing because of targets on this. I think you're probably going to get to like 172s, 170s. So when you look at this and you weight this, just like on the thing earlier from that book from Steve Cohen, maybe you have 6, 7, 8 points on this to go. It looks like you're up after market, by the way, already. So maybe, I don't know if you're long this. So you are gapping on this. So tomorrow, let's say you get to 168, 170s. I think that's the extent of your trade. Maybe you might get 172s, then you find the next idea. Okay. I'd also be cautious earnings there. unless you want to play with earnings risk. I don't like betting on earnings. It's not what we do. Okay. So this is a trade, nothing more. I wouldn't be buying like you see on Reddit. People call this a strategy. They bet on earnings, and it's basically a binary outcome. You get it right, you make money. You don't, you lose money. And again, most people aren't actually serious about this. They're gambling. And that's the reality. That's the reality of how this business works, which is why you have professionals that do this. And why you have so-called professionals writing for Seeking Alpha and then on Twitter with fake names pretending that they're flying on Gulfstreams. Okay. So that's that there this week. I like this. Good feedback on the show from a lot of you guys. Hopefully you guys enjoyed this week's show. Episode 79 next week will be filled more with earnings because a lot of earnings are going to be coming out. We'll talk about VF Corporation, GXO Logistics, a lot of companies we own fundamentally, get their earnings reports. A lot of updates will be coming next week as well. Issue 30 of the report will be filled with a lot of ideas here. So obviously there's ideas in the report. We're probably going to get a lot of new updates. Like Deck already had an update. So for those of you guys subscribed, there'll be new catalysts there. A lot of these companies are reporting. You'll get updates as well. We also might be adding companies next week or the next 2 or 3 weeks, depending on earnings. Okay. Depending what happens with earnings, catalysts, and guidance, etc., there might be new ideas added to the report. So that's what we'll get into next week. Sunday report issue 30 is out on Sunday. If you don't have access to the LongVol report, you guys can sign up here on this website. You can click this link, how members use the report. There's also, again, obviously, I talked about earlier in the show this week, new articles I'm trying to write. I don't write a lot of these articles about using the report, but we are trying to grow it a little bit more. And hopefully this week's show shows you guys how to use it. And also these articles that I'll continue to try to write, hopefully time permitting, each week show you how to use it as well. Okay, that's going to do for me. Enjoy your guys' weekend. Enjoy this episode. If you guys have questions, you guys can submit them in the Discord. Send me an email as well. And I'll see you guys Sunday in issue 30 of the LongVol Report.
Thanks for listening to this episode of the LongVol Report with your host, Dan Bustamante. Make sure to like and subscribe on your favorite podcast platform so that you never miss